never know with LinkedIn. Okay, we are live. Excellent. Hello. I was going to talk about the continuation of the first time home buyers incentive program that was canceled by the Canadian government. In my opinion, not too many people were using it for the past several years, and that's why it got canceled. I was going to do a 60-second video about its cancellation as a public service announcement because I really felt it didn't really deserve that kind of attention, what's happening. However, I was having some conversations with some other professionals this week about the government's announcement and what could that mean for their client. I was sort of reminded in that conversation about all the other times I've talked about the program with other professionals, especially real estate agents. And there's a lot of confusion on the topic. I believe the confusion stems to a lack of use and therefore not bothering to learn the detail. I mean, why bother to learn something you're never going to use, right? Based on my conversations since the government announcement, I felt there's a lot of confusion happening because there's other programs with similar names that are still active, still in use, and still good. Before I get into that, let me just take a moment to introduce myself. I help people to find money so that they can finance their dreams. Maybe that dream is about buying a house, or maybe leveraging the equity to make other dreams reality. My name is Juanita Heidebrecht. I'm an Ontario mortgage agent with Bricks Mortgages, a great supporting brokerage. They're actually one of the fastest growing brokerages in Canada. As a brokerage-based mortgage agent, I have access to many lenders, which means I have access to banks, credit unions, financial institutions, alternative lenders, B lenders, and private lenders. I'm also the founder of Building My Wealth website and podcast, a resource of various financial industry professionals and experts dedicated on providing you with valuable information on how you can build your wealth. I'm also the founder of Wealth Building Divas, a ladies only professional networking group in Ontario. And if that wasn't enough, I'm also a mom, avid reader, working on becoming a published author, crafter, and I love dogs. So let me get into the first time home buyers incentive. The three different programs with similar names that I'm going to be talking about today, they are as follows. The first time home buyers savings plan, FHSA, the first time home buyers mortgage default insurance, which goes by a few names, and the first time home buyers incentive program, which is the program that's being canceled, or actually is canceled. You could argue that the home buyers plan is the fourth one, but I don't think anyone's confused about it. I feel the biggest differentiating trait about the three programs is that it's about whose money you're talking about. And once you understand whose money you're talking about with the different programs, you'll immediately understand what program is being canceled and what are still going on. First time home buyers plan, FHSA, is a saving plan similar to the tax-free saving plan, which allows you to save your money tax-free towards buying a house. If you are familiar with tax-free saving account and how they work, it's going to be very similar, except the purpose of this is to purchase your first home. Not to be confused with the home buyer's plan, which allows you to use a portion of your RSP savings investments towards buying a home. That's about as far as I want to get into that about the first-time home buyer's saving plan or the home buyer's plan, because I would rather have a financial planner or financial advisors speak on those. Plus, I would like to get back to the heart of the matter, which is about the program the government recently canceled. I would like to point out that the two investment types, I'd like to point out that the two investment types are about your money and your money being used to purchase a home. Let's take a few minutes to talk about mortgage default insurance. Mortgage default insurance is alive and well. And if it was canceled, you would hear so many people crying about it. The news would make such a bigger deal about reporting it if that was canceled. I'm in no way saying that mortgage default insurance is a good program. It's what we have right now. It's a way for everyone who doesn't have 20% to put towards a down payment for a house. That's just what we have right now. We're working with it, right? If the government wants to replace the mortgage default insurance with something even better, I think everyone would be in favor of that. Right now, that's what we have, right? Once I start describing mortgage default insurance, you're going to think, oh, yes, I know what that is. Oh, I know that. And you do, or at least you've kind of heard some things about it anyway. Mortgage default insurance is still very much active, and a lot of people are using it. Prime lenders are expected to follow government guidelines administered by Canada Mortgage and Housing Corporation, CMHC, and the National Housing Act. One of the guidelines is to have at least 20% of the down payment towards the purchase of a house. Depending on the property type and the client, lenders might want more of a down payment, but generally speaking, this is going to be based on their risk appetite. To be able to put down less than 20%, but at least 5% of your own money, you still need to use a prime lender like a bank, credit union, or another financial institution. You have to use what's called mortgage default insurance. Don't worry, mostly based on government guiding hands. Actually, Canada Mortgage Housing Corporation is a federal run corporation responsible for administering National Housing Act with mandate to improve housing. A direct quote from Wikipedia. I could just hear the librarians out there cringing as I quote from Wikipedia. I know this because I used to work at a library. CMHC is a government run mortgage default insurance, while the other two, Sagan, formerly known as Genworth Canada, and the lesser known Canada Guarantee, the three are mostly identical insurance company offering mortgage default insurance. They were identical at one point, but I think during COVID or maybe just before COVID, the government made a small change in their guidelines. CMHC, being a government run, made the change as per government say so. The other two said, no, we'll keep things as is. They're not government run. They have their own actuaries. They have their own everything. That's why they used to be identical and now they're almost identical. What mortgage default insurance allows you to do is put down a down payment as low as 5%, maybe 10%, depending on, new construction. Instead of borrowing 80% of the home value because you put down 20% down payment, you're going to be borrowing 95% of the home value while paying 5% of the home value right away. Now, this is an insurance. You have to pay for the insurance. The insurance premium is added to the mortgage. So you're essentially borrowing 95% of the home value plus the insurance premium. The mortgage becomes slightly bigger. Per payment, you're looking at a few extra dollars. You're not looking at hundreds here. Being able to do this insurance has been very helpful to so many first-time home buyers. You most likely have heard of high ratio mortgage, and that's what we're talking about. Because the mortgage is insured by a third-party insurance company, lenders often offer a low insurance rate. CMHC calls their insurance mortgage loan insurance. Sagan calls theirs home buyer 95. You could also get an insured mortgage with an insured interest rate, even if you put down 20% or more. I'm going to get into those details about mortgage default insurance another time. Before moving on, we would like to make two big points that in order to be able to take advantage of this mortgage default insurance, you have to have verifiable tax-based income going back at least 2 years and have a pretty good credit score. This leads me to the first-time home buyers incentive program, the program that's being canceled. The mortgage default insurance plays a significant role with this incentive program, but they are not the same thing. Picture this. You're a first-time home buyer and you qualify as such. You can show the income, you have a good credit history, and you have 5% of the down payment. The mortgage default insurance is going to allow you to borrow more money, as we talked about. If you don't have the 5% down payment, this is where the government incentive program came in. You can borrow government money plus get a mortgage to buy your first home. The idea was you buy a house using the incentive program, mortgage default insurance, and get a regular mortgage. You could have a regular mortgage and use and this would be your first mortgage. Then a government loan would appear as your second mortgage on the house title. You pay your mortgage as per normal. You don't pay anything on the second mortgage. It just stays as a second mortgage for 20 to 25 years. After the 25 years of you living at that same house, the loan is completely forgiven. You don't even have to pay interest on it. Sounds wonderful, doesn't it? You still need to qualify for mortgage default insurance because you're still borrowing more than 80% of the home value. And you had to apply for the government incentive. Often, the mortgage agent would help you with that. Your overall family income would have to be under a certain amount. This sounds reasonable. I believe that that's the whole point of the incentive, to help people who would have a hard time saving up funds towards down payment, giving some assistance to those wanting to buy their own house. There was a limit on the price of the house that could be purchased and also a limit on how much in dollars and percentage you could borrow. In my opinion, this is why I believe first-time home buyer incentive was discontinued. I believe the incentive program could not keep up with the rising house prices. The rising house prices limits were laughable. I would imagine this was a great idea when it first came out, and the program just didn't keep up with real estate markets and therefore got used less and less. Now, the reason why I'm not getting into the specifics on what the limits were or what the borrowing parameters were before it was canceled, I did help clients and realtors with this program. However, what I found is that every area was slightly different. Even though it was a federal government thing. Each region had their own take or specific details on the incentive. Now, Toronto, Vancouver, and Victoria are cities that had their own specifics, but everyone, like every place you went, had their own little guidelines on it. When you would apply for it, you would apply for it through the region or city where the house you're buying is located. The general gist of the program is the same, but every region and the three cities would have their own specific details. Differences between the regions would be things like the house price limits, how much as a percentage and dollars you could buy, or sorry, put down towards down payment, or borrow, I should say, right, from the government. Who would this incentive apply for? Okay, not owning in a house for the last 4 years, I believe would have been the same across the board, and where you were renting or living might have been an issue. Okay. So for example, I remember one region you could be a renter anywhere in Ontario. I don't remember if it was anywhere in Canada, but I'm sure a number of regions said that the applicant had to be a renter somewhere in Ontario. I do remember one region where the applicant had to be a renter in their own region. Even the length of time for the second mortgage would stay on title was different. Government website, it said 25 years. I distinctly remember helping a client in a more northern area where the price of the houses were not as crazy high, and the length of time for the second mortgage for him was going to be 20 years. I was talking to a financial person, and she believes the incentives continued because of the way you had to pay it back if you didn't stay there the whole time. I don't remember the exact words she used. That's what she believes. It is true. If you don't stay for the whole 20, 25 years while you have that second mortgage, while it's still on your title, you have to pay it back plus a percentage of your home equity. But people buying a home, as a good number of them most likely believe that they're going to stay in the house forever. That idea may not have been true years ago, but I find it's true now. Most people don't stay as long as they think that they're going to. I was told years ago about 60% of Canadians do not stay in their houses past 5 years. I don't know if that percentage now is, higher, but I wouldn't be surprised. I can only imagine a good number of people having to deal with the headache of having to pay back the incentive right now who were able to use it. I still believe people not being able to apply for it, not being able to use it, is the ultimate reason why the incentive died. How much income you could qualify, plus a cap on the maximum you could borrow, numbers just don't work. I'm trying hard not to name specific regions. It's not their fault. For the sake of going over an example, I happen to have a recent copy of one location specific details where you could borrow up to 10% of the purchase price or $40,000 in a dollar maximum amount. So let's say that you want to borrow a maximum amount of 40,000. If 40,000 is 10%, the maximum purchase price would be 400,000, right? Your mortgage would be 360,000. Okay, that example sounds perfectly reasonable, but where in Ontario are you going to buy a house for 40,000? If you say, well, a condo, then you would be borrowing less because the purchase price would have to come down because you have to factor in 50% of the monthly condo fees. If 40,000 is 5% of the down payment, then the maximum purchase price would be 800,000. Okay, that sounds like a purchase price you could work with. The mortgage would be 760,000. You would have to be making a large annual income to be able to afford 760,000 as a mortgage. Remember, there was a cap on how much you'd be making yearly. Remember, the program exists for people who needed help with the down payment. In this example, the specific location maximum gross annual income is below 609,000. At 609,000, you're not going to be getting such a large mortgage. Even if you had zero in the way of debts, excellent credit scores, you had access to a super low interest rate, even then, the numbers still don't work. It would work out to be too high. I was using actual numbers from an actual location that I took notes of from last year, and I still had their information. I don't want to say what this location is because I don't want hurtful things said about them towards them because it's not their fault. I'm sure they were doing the best they could do within the parameters of the guidelines they were given. And if they were able to help anyone last year, at least one person, I bet you that office was completely ecstatic and super excited to be able to help somebody. I'm not sorry to see the first time home buyers incentive program gone. I think it helped people, years ago when the prices of houses weren't too bad. But now with the crazy housing prices, I don't see how it helps anyone right now. And so good riddance. Come back with something better. Personally, I think the government needs to build more houses. I also believe as a temporary measure to suspend Airbnb housing and open up Airbnb spaces back to renters. Building all the houses that they should have built years ago for the last 15 years, if you can bring all that back, then allow Airbnb housing again. I know that's not going to be a well-liked opinion. I'm okay with that. You can hate on me for that. But if you don't build the houses, then of course we're in this housing shortage right now, right? Again, just my opinion. Thanks for listening. Join me again next Thursday at 2 p.m. live on LinkedIn. You're welcome to listen to this again, Building My Wealth podcast, available on your favorite listening podcast service like Apple and Spotify. Feel free to comment or direct message me with your thoughts on the first time homebuyers incentive. Thank you. Take care.